I've been waiting for what I'm calling the everything rally, which is going to be a corrective bounce through the bear market. That's going to lift all sorts of equities and commodities. Everything's going to go higher. It's going to be great. But I've also said, and last Friday I said this too, that SPY and IWM did not reach the critical levels that they need to establish the beginning of that rally. And I was actually not very bullish. I said, yeah, I'm bullish. This looks good, but I'm not super bullish yet. Like, this is not looking that great yet. This is still looking like corrective bounce to me. And that's what we had. That's what we saw. So let's open up the charts and have a look really quick. You can see that SPY had a big red day today, opening much higher. So we had two gaps, but the gap filled towards the end of the day, and the spill during the end towards the close was just brutal and formed what's called a bearish engulfing candle. I have Volkowski's website pulled up, thepatternSite.com above, and that's thepatternSite.com. It's a great website. It looks kind of old school, but so is Volkowski. So this is actually a bearish reversal candle 79% of the time, and we are waiting for a confirmation close outside of the range of the two candlestick pattern to confirm it. Generally though, what we're going to see is more downside from here, because that's one bearish candle. I gotta tell you, it's looking bad. IWM also had a red day, didn't quite get a bearish engulfing, and it didn't quite make a dark cloud cover candlestick pattern either, but it doesn't look super bullish. Neither of them really do. And we have some economic data about the housing market coming out this week. OB1 clued me into that, so I'm thinking that data could come out poor, bad, and well, I think that, you know, housing data like new starts, that needs to be seasonally adjusted, like it really does. And so I'm kind of curious to see how the data is going to come out and how it's going to be interpreted by the markets. VIX, I said on Friday that, yeah, we had a big red, came down below this uptrend, and that's a breakout. But, you know, what if VIX just turns green and pulls back up? Because that's typically what happens when you hit a trend line and support like that. As you go through it, you come back up. And here we have a green candlestick on VIX with a gap up. It looks like the gap pretty much filled. So what's this looking like? It's looking like VIX is finding a nice bottom. It might come up and push higher as the markets move down lower and start this really painful sideways grind. I think everyone's looking for big up and big down, so we're probably going to go sideways for a bit. And that's just how I'm reading the daily charts right now. AMC did have a pretty good day, and I was expecting a little pop higher. This was a pretty bullish candle, and I said, you know, yeah, we're probably going to come up, but we're also going to find a top. And I expected that top to be actually at this last high at 1613. And we definitely exceeded that today, which is pretty bullish. If you're subscribed to my premium membership, Capavision, then you know that I'm actually looking at this now as a corrective bounce as well. That I think the motive waveform, that isn't the best fit, that we're probably looking for point C in a measured move up. That's a zigzag. It's just three moves, one higher, one down, one up. Typically the first and that last wave are of equal height, and if they aren't, you can kind of read into that a little bit. So I was looking for a topping pattern today in AMC, and it's possible that we got it. I was really looking for a close down towards 1613 to say, hey, we've got that top in and we're definitely going lower. 1654 is definitely above that, and it's considerable, so I've got to look at it. Let's hop into the intraday chart really quick on AMC and see what I have here. And this didn't save the chart that I had pulled up. I have to pull it over again. All right, here we go. So there's a lot going on here. Let me clean this up just a little bit for just a moment. Those arrows, those are the Mewtwo signal, and it's a signal that OB1 made, and it's great because it combines a bunch of different indicators. And if you've been following my channel, you know that I don't use a lot of indicators. I have price, RSI, and implied volatility, and that's it. And that's just the way I roll. I don't think I need more than that, and I think that getting too many indicators into your analysis can be kind of confusing. I think OB1's hit a good balance there with the way that he's using his indicators on the OB1 Mewtwo signal, so it's good. Here we go. Let's talk about today though. So I have this zigzag drawn in yellow, and it doesn't follow the price perfectly because it's just supposed to illustrate what I'm seeing, and that's a push up, a corrective wave down, and then boom, a push higher of just about the same height, taking us to today's high. And this all occurred within what looks like a triangle. Now this didn't have all the touch points needed to be a full ending diagonal triangle, but it certainly behaved as one. And I think I can see one, two, or I should say, let's see, if I start here, one ends up here, two comes down, and then three comes up here. And then we had another 1, 2, 3, 1, 2, 3. And so you can see that there's probably 3 zigzags through here. And I couldn't quite get a motive wave through there. I mean, you could, but it'd have to be a super short 4 and 5 wave. It's just called a triangle, and we had the bearish breakout. And what form, let's zoom in a little bit, and what form did that breakout take? Well, it took a motive wave form. Okay, that means that there was a 5-wave form, motive mode down. And it probably means that we're going lower too, another zigzag, right? So we had 1, 2, 3, 4, 5, very clean. And then an A, let's see here, A, B, C correction, which is an expanded flat. And then we have this dip, and it didn't quite come all the way down, and we kind of pulled up into the close. So this could be a partial decline in what Bulkowski would call, it's probably a right angled ascending broadening formation, or an ascending broadening wedge. Maybe it's a megaphone bottom. It's just a broadening pattern. That's the takeaway, is that this is a corrective form. That's what corrective forms take. So I have 5 waves going down in motive mode, so I'm calling that a mini wet wave 1, and this bounce be mini wet wave 2. And tomorrow at open, we're probably going to see a drop of bad economic data, I think, on SPY and IWM. We're going to see drops. VIX is probably going to go up, and I think AMC is going to follow the market there. I really do. And if that's the case, we're looking for a motive wave to take us down lower, and the depth of that motive wave should meet the same height as this initial decline, and that would take us back down underneath the top of that. That pennant that we were just talking about last week, and that this would begin a downtrend that could take AMC lower. So if you like that analysis, consider subscribing to the channel. I do a lot of analysis, and I do little write-ups at the end of the day, mostly when I think something important's happening. And I also do post trade alerts now on the community tab, so you can subscribe to see all of that. There's a join button next to the subscribe button down below. If you're on desktop, if you're on mobile, it might not be there. And if you're on Safari, it might not, I don't know where it is on Safari either. But if you're just, a normal Microsoft Windows, you're on Brave or Chrome, Edge, whatever browser you're on, there should be a join button there. It's $1.99 a month. And I just provide more content. Just a way to support the channel if you find this helpful. I'm trying to kind of build up my daily videos back up again. I know they kind of slacked, right? So I'm trying to just give them a little more life, a little more analysis in there. And so if you subscribe, I really appreciate that. For now, I'm gonna go, but be aware that tomorrow and Wednesday could be red days. They could be red days, so proceed with much caution. Yeah, that's all. Happy trading.